This is FinTech Insights, a series of conversations about the changing technology and payments innovations impacting the U.S. financial landscape.
Sean, welcome to FinTech Insights.
Thank you very much for having me today.
FinTech, pretty exciting evolution over the last, probably 3-4 decades of development, starting especially in Georgia with some of the credit card processing and some of the early technology that were developed out of Columbus and Total Systems and those kind of players going back a long period of time. Then through the .com and a lot of activity that exploded a lot of startup situations that have become industry icons, if you will. Let's talk a little bit about investing, obviously, but investing specifically in FinTech companies. Is that something unique from a VC standpoint, or is it sort of the same thing, only a different kind of technology?
Well, it takes a little bit more expertise. It definitely has the trends of a generic tech investing, but some VCs, I think, may get into it without a deep understanding of the underlying infrastructure, what it takes to take a credit card transaction, what the payment systems, why they're there, why there's interchange, how you manage around fraud. So there are some nuances to it that lend themselves to being deep in terms of industry expertise around it, more than just general tech investing.
And I come to it as a tourist. I mean, I'm certainly a generalist in terms of most of the sectors as far as the technology industry is concerned, but certainly this one seems to be driven more by patents, by having really core competencies that aren't just a unique idea being implemented in a creative way?
That's absolutely right. Now, we are on this precipice right now where the acceleration and the proliferation of mobile and broadband technologies and the fact that bandwidth, SaaS models, cloud models have become so much less expensive to build companies on that you do have the ability for creative new ideas in and around the FinTech space to come to life faster. And we always try to caution entrepreneurs to make sure that while they understand that it does not take a whole lot of money to build, call it a new payment engine, there are, rules and regulations and compliance that they need to think about as they go out and build these things. So we do definitely see the need to have complexity and thought into not only the user experience for these new companies and technologies that come out, but also into the compliance in the back office to make sure that they're copacetic with the regulation.
Sure, that's another aspect, regulation, without question. Now, let's talk about what I call successive transformation. I dealt with change already. Forget it. There's too much change. That doesn't even exist anymore. Now we have successive transformation. How do you deal with the criteria for considering getting involved in an investment in a FinTech company when everything is so dynamically fluid? Everything seems to be, as you're pointing out, not only enabled by things like clouds and broadband and those kind of capabilities, but also hybriding with other technologies.
Certainly. Great question. It really comes down to having a management team that both has an understanding of tech, the ability to listen to their end customers so they're able to make tweaks and pivots to their offering, all the while having an industry understanding of how the decisions they're making on the front end stay consistent with the back end and stay consistent with maintaining compliance, maintaining that regulatory framework in a manner that's legal, frankly.
Do you come at it with a philosophy that is long-term, or do you look at it from the standpoint of merge and flip and that type of situation? I mean, there was a while for a discussion, not just in the FinTech area, but in any software, could you actually have a long-standing business model out of an application that didn't eventually evolve into an economy, draw in more one-stop services, all done being in one place, or become part of someone else's economy in terms of an embellishment for their particular environment? Question, I guess, again, is from your overall standpoint, specifically in the FinTech business, can you look at a long-term strategy as far as a revenue model, or do you look at it as even adding that as sort of a plan A, plan B type situation as it might relate to being acquired or merging with someone else?
Well, I think it's always important that when you place an investment in an early-stage company, that you believe there can be a long-term sustained business model for that company, so that it's more than simply an application, but is an actual business built around a product and or service. Mm-hmm. We don't typically do the quick investment look to flip. That said, in all businesses, everything's always for sale. So there have been situations where a cool app or idea that we think can grow into a big technology ends up being acquired fairly quickly.
Okay, talk a little bit about, I think probably the best way to get some deeper insight into your experience and background would actually to go into some of the success stories that you've had about the companies that you actually invest in or worked with. Tell us a little bit about that.
Sure. We, at TTV Capital, we're about a 13-year-old venture fund, and one of the first investments my partners made was in an early-stage stored value card company that was at the time called Next Estate, and eventually became Green Dot. And we had looked at the industry at that period of time, and there had been a number of folks who were trying to get into this prepaid card, stored value card space. And the reason we really liked what Steve Street was doing was Steve wasn't trying to build a consumer brand. Steve had partnered with Rite Aid, had partnered with MasterCard, had partnered with already existing trusted brands to deliver the solution that the market wanted without having to go out and build his own brand. And ultimately, that was an IPO success story for us.
Really? And obviously that whole industry has matured out to the degree that it's, I guess, the whole concept of m-commerce, in terms, I guess that fits into the m-commerce category. Talk a little bit about how these technologies are affecting not just simply the payments environment, but in some cases impacting entire industries like retailing.
Right. Well, we definitely believe in this third fund that there is a lot of transformative activity around commerce in general. M-commerce, First Data calls it U-commerce, others have called it X-commerce. So you're seeing a blurring of the lines between what was online shopping and mobile shopping and point-of-sale shopping to the point where we think now through cloud-based point-of-sale systems that you can almost deliver the kind of shopping experience for a consumer at the point of sale at the brick-and-mortar store that you could if you were shopping on Amazon.com. So it's very, very transformative, and it creates a lot of opportunity for not only entrepreneurs, but also large organizations that deal with or have a lot of merchants like merchant acquirers to start looking at bundles and the ability to change the nature of the relationship they have with their end merchants from simply being a provider of payment acceptance to a provider of solutions that ultimately can drive revenue for their end merchants.
Now, I remember a couple of years back, actually probably even more than that, hearing Check Free talking at a conference and made a comment that was an epiphany. He said, if it's free, you're the customer. Now we call it big data and we call it pattern detection and that type of thing. Talk a little bit about, in fact, we had an opportunity to even talk to the CTO of Visa, and they were talking about the huge volume of transactions that occur in this space and the leveraging of that big data component and pattern detection, not only as it relates to potentially customer service, but even as it relates to potentially impacting transactions in the future.
Certainly. I've heard some very wise industry folks say that at a point in time in the not-too-distant future, it's likely that merchants themselves will not be the folks who pay the interchange in credit cards, but it'll be the folks looking to monetize the information around that transaction.
Sure.
I certainly also believe that while there is some dismissive thoughts around, the old line banks and processors and financial institutions aren't really equipped necessarily to pivot and take advantage of this, those folks are actually the ones who sit there on this treasure trove of data. And they ultimately will be fairly seminal in determining who is the end winner as we go forward in monetizing these transaction data. And you're absolutely right. Pete made that point, I guess it was back in 2009, and he is right. it's about the data. You do become the product as the consumer, and everyone wants to see what you're doing and figuring out how then to capitalize on pre-purchase activity by you so they can drive you into their store. Do what Cardlytics is doing here in town and look at how you're spending money and give large retailers the ability to target offers to you that are richer than any other offers that you'd get from Google. Google targets offers based on where you're searching. Cardlytics targets offers based on where you've actually spent money. So it's really, really a whole different mindset. And Cardlytics model works because they partner with the banks. So the banks are absolutely a part of that solution set.
I'm a high-wealth individual, and I'm looking to expand my portfolio, and I'm thinking about investing in some new technologies. Why fintech? Why the payments industry? And what does it make it such an attractive place for people to consider investing in?
Well, certainly one part of it is the fact that right now you're in a cataclysmic shift. As we've talked about, with this proliferation of the technology, with folks coming up with very disruptive business models for distribution, such as Square has, you're finally starting to see the larger FIs, the larger payment processors, recognizing that now is the time I need to be actively focusing on adopting new cutting-edge technology and taking some of the risks that I may not have been willing to take back when interest rates were high and I had plenty of fee income coming in. So that makes fintech investing particularly attractive. Additionally, it's not just FIs that acquire these companies. The acquirers for a big data or a fintech company that's looking at transaction volume could be a Google, could be a Yahoo. It doesn't necessarily need to be in the fintech industry to become a fintech player. And that's what we think is such an attractive reason that for somebody to put their money behind this industry.
Well, and obviously, a lot of times when we talk about the whole venture capital environment, specifically as it relates to Atlanta, there's been literally a decade or more of conversation, good, bad, right or wrong, aggressive, not really players and big players, and certainly people that have made considerable successes and a whole lot of money. But the reality comes down to the fact that investors invest where the opportunities lie, and if they're going to be parochial, that's great. It would really be good back in the day when you put money into a company, and one of the criteria was, if I'm going to put money into it, I want you to stay in Atlanta. Now it's a case where I think you've got to go where the opportunities lie. And yet, all of that being considered, and of course that's just my opinion, but all that being considered, isn't it ironic that Atlanta continues to come back time and time again to the point now where many of the experts are saying, in the cliche description, but I think it's really valid in the fintech area, it's one of the areas where Georgia technology really leads. And I think a lot of people don't realize the sense of identity in place. I mentioned Total Systems and Synovus and some of the stuff that happened in early credit card transactions and the evolution. But I guess where I'm leading now, Sean, is talk a little bit about fintech as it relates to the Atlanta marketplace, and why has it become such a hot spot?
Well, it's kind of like a sleeping giant is finally awakening. Georgia has had, as you've noted, a rich history around credit card transaction processing, but a lot of folks don't even recognize that as of right now, almost two-thirds of every credit card transactions globally go through a company that's headquartered in the state of Georgia. We have over 75 financial technology companies within 90 minutes of downtown Atlanta. And these executives, they like living here. There's a low cost of living. You have wonderful schools such as Emory University, the University of Georgia, and Georgia Tech. So you've got a talent base that's here. And it really is a tight-knit industry. And finally, everyone's recognizing that we've got something special going on here with this cluster. So with FinTech Georgia, we're trying to make sure that we can continue to keep that momentum going, start to get some earlier stage companies coming out of our universities, and we're starting to see that, and continue to have the big folks look around and say, I don't need to go to the Valley to find the kind of technology that I need to deliver this solution. It's right around the corner.
You are one of the leaders, obviously the chairman for the TAG FinTech Society. I know there's a lot of interesting events and meetings and a lot of thought knowledge and thought leadership that's shared time and time again. One of the big events now that has become, I love the term that there are a couple of societies in TAG, like Health IT, certainly now FinTech, they're called super societies. And I think that's like what you say, the momentum has shifted, and it's almost the case now where the expansion and the growth is getting not only just exponential but phantasmagoric. It just seems to be magical the way things happen bigger and bigger after every year. You guys have got a symposium that's coming up. As the chairperson, let's put in a little hype and talk a little bit about the TAG FinTech in coming up in the fall.
Sure. Thank you very much. I wish I could come up with words as descriptive as you had there. So the TAG FinTech Georgia 2013, this is our 4th year of hosting these symposiums, and we've tripled in size from about 100 attendees back in 2010 to we had over 300 last year. We're expecting over 500 this year. We have a tremendous Lifetime Achievement Award going to Pam Joseph, who is the Vice Chairman of U.S. Bank in charge of all of payments, who's been a key player here in the city of Atlanta and globally for the merchant acquiring businesses. Mark Lavelle, who's the head of strategy at PayPal, is coming out to talk. We have folks like Home Depot coming out to our panel. We've got a whole bunch of good merchants. You'll have a lot of C-level executives from these Fortune 500 companies in and around Atlanta, that not only from the payment companies, but also we draw fairly well from Coke and some of the other companies. So it's an exciting event. It'll be on November 13th at the Waverly Hotel in the Galleria area, and we'd love to have as many folks as possible come and learn more about what's going on in financial technology, not just in Georgia, but all over the country.
You know, it's always an interesting challenge to try to determine what comes first, good people or opportunity. I think obviously it's got to be the combination of both simultaneously. I think a lot of what's happening isn't by accident. It's certainly been earned, and it's over the course of an evolution. And it's come from leaders now that have gone on their ways and literally have become technology Hall of Famers. But then there's also a whole new generation. And, Sean, you're part of that generation. John, thank you for joining us today on FinTech Insights.